Good evening. A very warm welcome to this edition of Business at 9 here on ET Now. I'm Vikram Oza with the big business news that has been buzzing through the day, and that's how it makes its way into the show. Right on top, it's about Titan and the third quarter numbers, largely missing estimates. Profits have slid 4.8%. This on a year-on-year basis, and we're looking at it come through at 990 crore rupees. The customs duty, worth 253 crores, has weighed on the profits of Titan in the quarter gone by. The international eyewear and jewelry segments, however, we've seen some strong kind of growth in both these bits of their business. My colleague Snehi is here. She's joining us on the phone line to break down the numbers for us. Snehi, we have been looking forward to the third quarter numbers of Titan. Now tell us how they look, because it seems like the jewelry business is doing well, eyewear business is doing well, but tell us why profits are dipping. What exactly has really caused that?
Well, absolutely, Titan. Overall, a miss coming in versus street estimates. Revenue on a standalone basis has come in at 16,097 crores, which is an uptick of 23.3%. We were expecting 16,320, so largely in line. A big miss coming in on EBITDA. That's just come in at 1,510 crores. We were expecting this to be north of 1,650 crores, so miss on that front. Net profit also at 990 crores, which is down roughly 5%. Miss on that front as well. There's been an inventory loss due to custom duty cut at 253 crores. This is an exceptional item, but it's in line with estimates, and this was already penciled in. Margin has come in at 8.6% compared to 11.6%. We were expecting 10.1%, so miss on this front as well. What's done well along expected lines is the jewelry business. Revenue is up 25.5%. However, EBIT margin is under pressure at 9.5% compared to 12.2%. Same-store sales growth is at 22%. Gold jewelry up 24%. Non-solitaire category has grown in healthy double digits. Solitaire has remained muted. Carrot Lane also good show coming in, up 27% on a year-on-year basis. Watches and wearables has done well, up 15%. It's the analog segment that has done really well. For eye care, revenue is up 16.2%, and sunglasses have done well in this segment. However, they've closed 3 new stores of Titan Eye Plus in this quarter, so that's something to watch out for. Emerging business, Taneira has recorded flattish sales. Fragrances have recorded a healthy growth of 27% on a year-on-year basis. That's a lowdown on Titan's quarter 3 numbers. Overall, revenue in line. Everything else is a miss versus our expectations.
All right, and today we've seen that stock move up, Snehi. It's gone up about half a percentage point in trade. We'll keep tracking what happens with it. But meanwhile, we're looking at Asian Paints and their numbers as well. It's a report that says it's pretty much in line with expectations. An exceptional revenue item over there, which has made it miss estimates. But revenue, for the most part, pretty much okay. It was down 6% year on year. Net income has dipped 23%. Margins have narrowed to 19% in third quarter. But this is on the back of muted demand and weak festive season as well. So that's as far as Asian Paints is concerned. But we got in a perspective on this from Rabindra. Just listen to what he had to say about the kind of numbers that Asian Paints has posted this time.
Well, Asian Paint has announced its Q3 FY25 number, and the revenue can be seen at 8,594 crore, which was down by 6% year-on-year basis and below with the estimate. If we talk about PAT can be seen at rupees 1,110, which was down 23% year-on-year basis and in line with the estimate. If we talk about EBITDA margin can be seen at around 19.1%, so which is in line with the management guidance. And the decorative paint business has registered a volume growth of 1.6%, which was better than estimate. If we talk about segment performance, then the industrial business grew by 3.8% on back of the general industrial and refishing segment, and the home decor business benefited with the progress on network expansion journey. And there are also management commentary coming on in Q3 numbers, where the CEO of Asian Paint has said that they remain cautiously optimistic on a recovery in demand condition, and the paint industry continued to be impacted by subdued demand condition during the quarter, especially in urban areas. So overall, the Q3 numbers of Asian Paint was in line with estimate.
Ravinder, thanks very much. That helps us understand Asian Paints and the kind of numbers they've kind of put out. But let's also look at this entire consumption story that is panning out. We had a word about the consumption story, the kind of budget boost that's coming through for the middle class with Nestle India's Managing Director, Suresh Narayanan, was speaking about their plans just ahead of Nespresso ETC during an investor presentation. He's touched upon the company's supply chain capabilities in the quick commerce universe as well, which is gathering momentum. And of course, he's spoken about the entire consumption piece as well. Listen into what he said.
Consumer class is going up significantly. We have pressure points. I know I was the one who made the comment about a shrinking middle class, right? In some sense, it has been answered in this budget. I'm so happy to hear that. But again, let's be very clear that companies like mine, we survive and thrive on the affordable population and the middle class. It's important to us. The rich are important for what they buy, but it is the midstream that is important for us, because that is the belly of the market. And there, almost 60 million households are estimated to be added in the next 7 to 8 years, at least till 2030. Those are the numbers that we've got. Despite opportunities, challenges remain. So I don't want to leave you with the picture as I've always done. I think credibility and trustworthiness have been a characteristic I've tried to and strive to develop in all these years. Is not to show that everything is rosy and pink and everything must click back again to huge growth. There are challenges. I think one of the advantages of quick commerce has been that our capability at supply chain management has dramatically improved. Right? We have to challenge ourselves because the consumer challenges us. As a company, we always balance our channels. So I don't want you to get the impression that it will be quick commerce and quick commerce all the way. We know we have quick commerce. We know we've got other traditional e-commerce. We know we've got traditional trade. We know we've got modern trade. We know we've got pharmacies. We know we've got other outlets. We have to balance the terms of trade between all of this on the principle of fairness, salience, and sustainability.
Well, laying out the strategy and the approach, that's Suresh Narayanan of Nestle India talking about how exactly their growth roadmap looks like. Meanwhile, Zomato's founder, Dipinder Goyal, has been sharing details of the letter of Zomato shareholders, and that's where it stated that in 2024 alone, over 15 lakh partners chose to work with Zomato, and these partners have the flexibility to earn all year round, logging in at any time. My colleague Sharad is here to put that in a nutshell for us. So Sharad, what exactly is Zomato's Dipinder Goyal saying about their approach to partners?
Well, important commentary coming in for the gig economy, and Zomato has released its letter to its shareholders, and this is the important data pertaining to the company. Now, in this report, it stated that in 2024 alone itself, 15 lakh folks were entered as partners and they chose to work with Zomato. Interestingly, for those working at least 8 hours a day, the average monthly earnings, that number stood at 28,000 rupees. Now also, expectation is that there would be savings coming of almost 5,000 rupees as well. In this report also, they have stated that the claims paid to the partners have actually exceeded 53 crore rupees annually, with almost 55% of 2024 claims covering the non-accidental medical expenses. Apart from this, also they have stated that the delivery partners have the flexibility to earn year-round and logging in at any time. Now, why we have taken this report and why we are addressing this issue is how the gig economy is actually functioning and what are the numbers which we are looking at for the academic purpose for this new economy. Now, interestingly, let's look at the trends, how it has panned out, and this is just for Zomato. We have taken these numbers from their shareholder notes. Now, over there, he have stated, firstly, being that the average login days per delivery partner. The data is coming from calendar year 2021. The number was 51. Now, over the next 3 to 4 years, the number has come down to 46 in calendar year 2024. Now, the significance of this means that the temporary employment is something which is becoming a major trend, and that is what we are seeing, and that's the definition technically of a gig economy as well. So that gives partners to take holidays, to choose other professions, or to actually work as per their requirements, especially on the time front. Another interesting thing we got from the overall numbers is the average earnings of delivery partners. In calendar year 2021, that was roughly at 23,709, and that has actually gone up in the last 3 to 4 years by more than 20 to 15%, and the current numbers coming in at 27,726. These are the average earnings per month which has been taken for Zomato. So of course, an interesting update coming from Zomato, but we did get a sneak peek of what actually happens in the gig economy. But also the question remains is that what are the total number of labor hours actually being put in which are not being considered after getting logged in, and is the wage commensurations actually equal or not. So of course a lot of questions would be asked, but nevertheless we did get a sneak peek of what actually the gig economy is right from the horse's mouth.
Yes, indeed. A deep insight into the gig economy. There's something that we will keep tracking because quick commerce is growing by leaps and bounds. So this one is an important piece. Thanks for that. Now, when it comes to the fashion business, Trent seems to be under pressure. And one of the reasons that is being cited is the re-entry of the online fashion brand Shein in India. So Reliance Retail, we have told you, has launched the app on the 1st of February, the Shein app, and my colleague Jinai has been tracking developments on this. So it seems like Trent is in trouble because Shein is making a re-entry. Jinai, tell us more about this.
Well, yes, Trent is under pressure. Well, we have a note by Elara Securities who are maintaining a buy rating on Trent with a target price of 8,500. Now, what they believe is firstly the Shein app, which is making a comeback in India after its 5 years ban. It has partnered with Reliance Retail and has relaunched on February 1st the app. Now the app has initially will operate out in Delhi, Bengaluru and Mumbai, and it has already got 10,000 downloads on the Play Store. Now if you look at Shein, it is basically known for its affordable range of western and fast fashion. If we talk about competition in India versus Shein, the fast fashion offers a fast growing opportunity and the entry of Shein will likely hit up the competition. Now Elara believes that for Shein, establishing a reliable pan-India supply chain and delivering a model will take about a year or two, which is subject to again a brand traction going forward. Also, they're expecting that Trent's flagship brand Zudio, they will be capturing market share further, strengthening its brand recall. What they believe is that Shein's product offering resembles with that of Zudio. However, the price codes are mostly above 1,000 mark, whereas Zudio's price codes are mostly below 1,000 mark. They also believe that Zudio will further continue to sail through because of its differentiated offerings versus the recent entrants in the space such as Viewstar, Style Up and Intune, which are yet to meaningfully scale up yet. And lastly, Shein may also not possess competition to Nykaa Fashion, as Nykaa Fashion's overall AOV is much higher at 4,000 to 5,000 rupees, and that is why Elara Securities believe given a buy rating on Trent with a target price of 8,500.
Jinai, thanks very much. That helps us understand what's happening in the fashion business as well, and it's getting extremely competitive. Meanwhile, we are talking about Reliance, all set to make that fresh mark in the beauty universe. We've learned about Reliance Retail entering the Ayurveda beauty segment through their new private label, and this is called Tira. My colleague Anjali Palod is joining us. She's got some exclusive information about this. Tell us about what they're trying to achieve in the beauty segment. It's an Ayurveda pitch that is being made through their brand Tira. Anjali.
Reliance is looking to make an entry into the Ayurveda space with the launch of a premium brand under its beauty retail platform, that is Tira. Now this will be a private label under Tira and will be a premium Ayurveda based range which will include skincare, hair care, body care as well as wellness. Now some of the products under this range would be night and day creams, body lotions, soaps, hair shampoos, conditioners as well as candles and aromats in the wellness space. Now the product testing for this range has already been done and it is expected to be launched by April this year, and this will mark Reliance's first entry into the Ayurveda space as well. Now as far as the production for this range is concerned, what we've learned from sources is that the entire end-to-end production will be done within the Reliance ecosystem, and the products will be placed in the online and offline stores of Tira as well as other Reliance retail stores that it has. Now, as of Q3 FY25, Reliance Retail Ventures posted a revenue of 90,333 crore, which was up 8.8% year on year, and their EBITDA margin was at 8.6%. Now with the private label, the EBITDA margins are expected to be better for such brands since there are better margins. So with the launch of this Ayurveda based brand in the premium space, Reliance will now be entering the Ayurveda space.
It's a big entry and something that we'll be watching very keenly, Anjali. Thanks very much for that. We take a quick